No, I wanted to buy covered calls on it, but then I realized you need $30,000 for that, or $15,000 if you use margin.
P-Tom is up for like the week, 20%.
Hey, can you check if it's live, Eric?
Yeah, it doesn't look live.
Can you hear yourself?
Hold on.
No, it's live. I need to change the thumbnail though. I'm gonna work on a new thumbnail. Can you send me that picture you sent me?
It's in our conversation.
I don't want to look through it. Just resend it.
It's not even that far up. It took me like 2 scrolls.
Was it a DM or was it in a group?
Yeah, it was in our DM. Here you go.
Alright, so I'm gonna put a stock chart behind it. Here, I'll show you.
That's fine. You do whatever you want.
You look like a barbarian. But good. In a good way.
Thank you. That's fine.
In a good way. Like a sexy barbarian computer guy.
Look, it shows that you have 2 live streams right now.
Wait, what do you mean?
No, the other one's closed.
Wait, what do you mean 2 live streams?
Look, I sent it to
Wait,
you.
why is it on this? Why is it on this? No. Why the hell was it on StockTwits? Alright. Oh. Damn, son, where'd you find this? Hello, everyone. We're looking at Zoom right now. I'm gonna move on to it. Wait, what should we watch? Rocket. Alright, everyone. If you're not on Team Rocket, you're sleeping. Because this thing is going to 55.
Don't sleep.
As by said, at Doggy Lover 69 on StockTwits. We all know StockTwits is the #1 source for stock news and info. YOLO Neo says, buy calls, retire. Rocket 33 is the new 29. Rocket, dump all you want, market makers, not getting my shares until you offer 70 plus. Dude, these people on StockTwits are insane. They're literally retarded.
Don't sleep, we got the heat.
The R word is feasible now, right, guys? We can say the R word.
No, it's not.
It's still not cool? Okay.
Still not cool.
Scratch that. I meant these guys are redundant.
They're autists.
Yeah, they're autists. Rocket 36 calls. Rocket diamond hands. Rocket like if holding through ER. I am. I think everyone's holding through. Wait, so what's everyone's exit plan on Rocket? Let's say in the least likely scenario it tanks to 25. What is everyone doing? Is everyone holding? I'm holding.
Well, mine's expired the 18th, so I have to hold.
Wait, why does it do that? 32.67. What was today's high? 34. Alright, just $2 more, boys. Okay, well, for all you guys that don't know what this pattern is, what does this look like to you? Sexy.
A descending triangle.
Wait, really? That's bearish though. We don't want that.
It looks like a fat guy on the beach.
I think it looks like a very weak bear flag. There's no pole. I mean, the gap up. Can a gap up be a pole though?
No, because
it's a fat guy on the beach.
It gapped down already. It's bouncing off the 20-day moving average.
It's that. That's that pattern you sent though. So it was going lower lows and then now it's switching to lower highs, or no, higher lows. So maybe it's an inflection point. I don't know. See, guys, I personally think technical analysis is bullshit. So I just say all of this to help myself understand why I'm still holding it.
I hope you all bought the dip on Apple.
Oh yes, Apple dipped, ladies and gentlemen.
150 in December.
150 tomorrow, baby.
Excuse me, sorry.
It's fucking insane. I was like, wow.
Okay, everything has settled down. I don't think I need to monitor my account.
Yeah, I'm good.
All you have to do is set and forget it, boys, and hope the next day you're green. Gap is up though today. It's amazing.
Let's go, yay.
I'm still down though on like $40 calls. I hate Josh sometimes. Why the hell did I buy a Gap $40 call?
I really don't know why.
I just copied Josh on that one. I don't know why he did that.
Gap, I don't see Gap going past 20 anytime soon.
Yeah, max is 25, and that's like on a...
It's on a good day.
Wait, why'd you send that, Eric? What is this? What am I
Oh,
looking at?
it's a ball and cock pattern.
What? You ball. I hate you. What is this? You literally disregarded the top, dude. You just didn't include the top in your drawing.
What are you talking
Yeah,
about?
you're not supposed to.
It passed the ball line.
Yeah, it's a
What the hell is this?
It's a ball and cock trend. What the heck?
Yeah, it's a
Where's the
ball
cock?
trend.
You don't see the shaft?
You
Oh,
don't-
it's a
you
upside. It's an inverted cock.
Oh, so that's a vagina?
It looks like a thong, actually.
Wow, where's Cross? Can he join the call?
여기서요.
안녕, 안녕.
What's 안녕 안녕?
I don't know. He just said it.
It's
You
a
know
vegetable.
what? You know what Ajinomoto is?
The anime?
No, like the food thing.
No.
Oh. Hey, do you have a long term, Eric?
Yeah, his Apple and Tesla.
My apple.
That's it? No, I mean like a apple, like a diversified long term.
No, I don't.
Why not?
Cause I don't.
Yes,
I
Tesla.
haven't looked into it.
Well, you should try looking into it. If you don't trust yourself, just copy Vanguard or Fidelity Mutual Funds on M1. But use M1, don't use Vanguard for Fidelity. Even if you want a Roth, because M1 has Roth and traditional, I think.
You get the best of both worlds.
Rocket, look.
Microsoft.
Hey, watch the stream, dude. Look at the stream real quick, Eric. Dude, you know this guy died 3 times this year?
Which guy?
Look at the stream.
Oh.
He's died 3 times this year. People are so dumb on stock tweets. Hey, can you explain to me and to everyone implied volatility? Because I watched In the Money's video, I still don't understand.
Implied volatility.
Yeah, he said if someone's implied volatility is 50%, that means people think it will move 50% in either direction.
Yeah, it's plus or minus.
One standard deviation, right?
Yeah.
So if Apple has a 50% implied volatility, people think it's gonna move 50% in one day, or is it for until the expiration of the thing?
I think it's until expiration.
All right, guys, let's dive into this. Let's look at Apple. So I'm trying to understand IV. Dude, I joined a new subreddit. Have you heard of Theta Gang?
Theta Gang.
Yeah, Theta Gang on Reddit. So basically what they do is they take advantage of the degenerates at Wall Street Bets. So now you have best of both worlds. Like they'll check whatever meme stock people are doing in Wall Street Bets, and then they use Theta to take advantage of them. Which I still don't understand what Theta is.
Theta is time decay.
Oh, Theta's time decay?
Yeah.
See, look, Apple. Implied volatility, 50% on all of them. That makes no sense. Apple's not going to move 50%. Even if you get one month from now, implied, oh, still 50%. Eric, can you tell us what implied volatility is?
You get the best.
Um,
Too rich for we like to do.
It's okay, guys. I already have it priced in, guys. As soon as Telegram gets more popular, I sell my camera username for $10,000. And then all my losses will be covered. Yes! Oh, looks like things are going down again.
You get the best of both worlds.
I think implied volatility is not like that it's gonna go 50% up in a day.
That is what it means?
No, I don't think it does. I think it's
What does it
on
mean?
long term.
No, but here's the thing. The implied volatility is the same whether I pick a September 4 expiration or I click
Yeah,
on
because I think it's based off an annual. I think it's based off annual,
Oh, it's
not.
annualized?
I think it's annualized.
People think Apple will move 50% in 1 year. Either way, either direction.
Yeah, by one standard deviation.
Can you explain to me standard deviation? Because I know it's 68%, right? And then 2 is 92%. Or something.
Yeah, so one standard deviation is like exactly. It's like a measurement for
For
that
my cat.
that it's a measurement that like describes 68.2% of outcomes.
It's been a long time coming.
So like, let's say you have a stock. Let's say Apple stock. One standard deviation of an Apple stock would mean that you have a 68% chance of it settling within an expected range. Does that make sense?
Sorry, say again.
So a standard deviation encompasses approximately like 68% of an outcome. Does that make sense to you?
So
it's probability.
It's probability, yes.
Oh, what the heck?
It's statistics. Standard deviation is statistics. It is technically probability,
Where does
but
the
it's
68%?
statistics.
How can standard deviation be the same for everything though? How do they get that 68% figure?
It's like the rule of standard deviation, 68, 95, 99.
Shouldn't it vary though? Based on the instrument? Or whatever you're looking at? I don't understand how can
Your
everything
standard
have the
deviation
same...
will change.
No, I'm saying how is it always 68% though? For everything?
Because it's like a unit. Like imagine pi. Like if you have 1 pi, it's 3.14. If you have 2 pi, it's something else. 3 pi is something else. But it's based off a standard, like a static variable. A constant variable, excuse me. It's based off a constant. So like standard deviation is a constant for the most part.
Dude, who is Cross's plug? This shill is still going up, dude.
Yeah, it's like 10%.
I think he just looks on like...
Was this on your radar? This was not on my radar.
I think he just looks on StockTwits, because on StockTwits they're talking about Shell, they're talking about FMCI.
How about his... What was the other one he put? SPAC?
Look, yeah, look, this
Spartan
person...
Energy?
Look here, I'm gonna DM you and Renell, just individually, but it's the same message.
Where?
On Telegram.
Well, that's what I do on StockTwits. I look for people who have more than 1,000 followers. I feel like if you have 1,000 followers, You must know what you're saying, or your
This one's
point.
called "Damn, I Should Have Sold."
How many followers does he have?
73.
No. Yeah. If they don't have at least 1,000,
Damn, I should have sold.
I'm very curious.
Damn, son, where'd you find that?
SPAC. See, even that SPAC is up 5%. So he just made $50.
So to explain standard deviation a little bit more, I'm sure you guys understand it a little bit, but it's like
I don't at all. Eli 5, please. Eli 5.
Eli 5.
Yes.
Mm,
Use toy cars as an example.
Okay,
Toy
so,
cars.
okay, didn't you do finances or something? Shouldn't you know this?
Yeah, but we learn more about like Mac and depreciation and time value money, not
I see.
standard deviation.
So when you calculate a standard deviation in
That's
mathematics,
just rice, huh?
Hold on, he's gonna wash his hands because his hands are.
he's gonna wash his hands.
Yeah, because he just jerked me off.
Isn't that just rice?
It's sticky rice.
So why is it green?
Maybe what they used to make it sticky. Like my cum.
It's the starch, probably.
Do you think Intel will hit 60? Eric,
What?
do you think Intel will hit 60?
60?
Yeah. It was at 68 earlier this
Intel.
year.
It's hard to say. Intel's like 60. Let's see. 49. Do they have earnings coming up?
They have
No.
an event today.
Earnings is next month.
Do you know what the live show is
So
about?
their stock has only gone up $3 in a month. And then let's see, over 6 months, if we look at the highest was what? 69. Oh wow, 69. It was 69 when.
Oh, let me tell the stream. Hey, stream. So I'm currently in $9 put credit spreads that I have risked 1,100 for. So $9 to win 1,000. Wait, no. Risking 1,100 to win $9. And my friends ridiculed me for it. Stream. They disgraced me. But as long as Lulu does not reach 450, the $9 is secured by Friday, which does not look very likely. So again, this is for if you really just want to be safe. You can do. I can show you guys what I did. So for Lulu, which is my worst position, everything else I have at least a 20% movement. So the stocks would have to move 20% in 2 days, basically, for me to lose, which is, unless you're at Zoom, quite impossible. So the profit is all but locked. But let me show you guys what I did. So for Lulu, I grabbed. Well, can you actually watch this, Eric, so you can learn why I do these like on the surface it seems retarded, but once you realize what I'm doing, it's still retarded. But at least you can see why I risked it. All right, so for Lulu, yesterday at 387, the price was 387, ladies and gentlemen. I went to the September 4 expiration, which basically means I only need to be right until Friday. And I picked these calls. So for calls, you're in the money, the lower you are, the lower the price. And the farther the price, the higher your price, the more out of the money you are. So idea is I buy out of the money strikes that are at least 15% away from the money, 50% out the money. And when you buy, you have to buy the more expensive, or no, you have to buy the cheaper option and then sell the more expensive option. So your net, so like for example, if I opened it right now, I would buy this one, this 455 at 21 cents, and then I would sell this 450 at 25. So Eric, can you do the math?
What's the math?
The math is if I'm selling, it changed. No, if I'm selling this 25 cents, I get $25. Correct?
If you sell this for 25 cents?
Yeah, I get $25. Because remember, this price you have to multiply it by 100 when it comes to options.
25 cents is $25. Yes.
Okay, so I sold that. Now I'm buying this, and the reason you're buying and selling it is so that you minimize your risk doing this. I buy this one. So then what's the net occurrence?
I can't even see it. Your stream sucks.
Wait, what? What do you mean? Oh, is it too small? Get a better monitor, nerd. Here, I'll zoom in for you. You blind. There, is that better for you? Huh? You like it big?
I don't know. There's like a 15-second delay.
Oh wait, really?
Okay, hold on. Something's moving. Oh, it's
Tiger
very
Lake.
close now.
What generation is Tiger Lake? 11?
It's Tiger Lake. It is 10th gen.
Dude, I love that new. Is that their new logo? That thing you showed? I really like that logo. Much better than the one with
Actually, Tiger Lake is the 11th gen, and yeah, that new logo is for the Intel Xe.
Oh, so they need to make that Intel one the new one.
I think they are going to eventually.
Cause their Twitter still has the one with the oval.
They're supposed to announce that graphics card that you were talking about. They're gonna announce it today, I think.
Oh, that's what the live stream is for?
It's for Tiger Lake, and then Tiger Lake will show off the first, I think, Intel Xe GPU from Intel.
Wait, so yeah, what's the net? Come on, hello. Math class is in session. What's the net? What
I
happened
don't know,
here?
you're looking at TechCrunch. Oh, there we go. The net is 18 cents.
How did you get 18 cents?
Because that's where your mouse is, 18 cents.
No, I sold a pound of turkey for 25. I sold chicken for $25. I bought the chicken at $22. What is the net value, dude? Hello?
Hello?
What's the net value here?
$50.
Alright, I'm done with it. I'm done with
No.
it. I'm
Isn't
trying
it
to
$3?
teach you.
It's $3.
It's $3, okay? So the net thing is you make $3. And so that's what happened for me. I made $3. Now
You made $3 out of 25.
No. I made $3, which the collateral is the difference of the strike price. So what's the difference between the strike prices?
The strike price?
Yeah, this is the strike price. This is the
Hold
premium.
on. Sorry, I paused your thing. Sorry. Okay. Okay. So yeah, so it was the difference, I mean, of $3.
No, I'm saying what's the difference between the strike? The difference between the premium is your profit, which is $3. But what is the difference between the strike prices?
Oh, it's 3 cents or 0.03. Oh, I see 5. What is that number on the side?
Yeah, it's 5. 5, dude.
Okay.
450 minus 445. So then again, with these options, you have to multiply it by 100 because it's 100 shares. So it's 500. The collateral is 500. So I'm risking 500. If I'm wrong, I lose $500.
Oh, I see.
If I'm right,
I didn't understand that call.
I just lock in my $3. So now, why would anyone ever risk $500 to win $3?
Yeah.
Right?
Right.
Is because I only lose 500 if Lulu goes above this line. It has to go to 450 for me to lose.
Which line?
By Friday. 450. It's at 393 right now. It needs to go to $450 for me to lose.
Are you talking about the orange line?
No, this blue line. Above that. This blue line is at freaking 442.
Oh,
It needs to move this much. It needs to move that much. From here to here in 2 days. Which, as you can see, the last time it moved that much in 2 days was Corona. Right here. Even remotely. So unless something Corona happens, the $3 is locked in. Does that make sense why I did that?
Yeah, it's guaranteed.
It's basically the opposite of what people on Wall Street bets do.
Yeah, you're trying to make small amounts of money rather than
making
large
small amounts of money, risking a lot of money compared to what people do. They put a little bit of money to risk a lot of money, to risk a lot, to win. Yeah, anyways, you know what I mean.
Yeah.
So yeah, I was scared because this morning it had popped to 399, but it's down to 393 now. Looks like it's gonna
Go back to that chart you were showing me.
The chain? It's called a chain.
The number chart.
Yeah, this is called a chain. Option chain.
Hold on, because it's like I said, it's like a 15-second delay.
Right, so now
oh, I see. The last value is implied volatility. Okay, cool.
You want another option lesson?
Sure.
And this one, I want to know what you think of this. Sexy.
Is this all in Webull? Is this the
Yeah, this is
Webull
all.
thing?
What do you think of this? Remember when we were selling? Do you still do iron condors?
No.
Yeah, I understand iron condors.
You do?
Yeah, I do.
Yeah, no, you don't. You literally couldn't even understand the difference of the premiums. Well, dude, look, this guy.
I do understand the difference of the premiums. I'm being a troll to you.
Okay, explain an iron condor for the stream. Go. I'd like to see you. I'd like to see it. Go.
Is when you're put into. Oh wait, hold on.
PFE.
Why does he like that's Pfizer, right?
Yeah.
Pfizer is a large cap. I don't understand why he's selling. Hey, when does Mandalorian come out?
I don't know. They just announced it. October 30th.
Hey, they got slapped by Abbott, right? PFE. Are they in the same industry? Abbott, right? The pharmaceutical.
Yeah.
I really don't understand why he's even looking at that. No, break even does not factor time decay, right? The break even doesn't factor in time decay?
Why? Wait, so how? Oh, I see. Oh,
It does?
Yeah.
Okay, never mind.
Why would you buy a call that's underneath the share price?
Yeah, no, you shouldn't buy that. What he should do is, you would only do that if you're selling.
Right? You would never do that, right?
It's already way into the money.
Yeah, like you would never do that,
Stock
right?
is minus premium is my gains. You only gain.
What would be the advantage of being able to purchase a lower call? Just to hold on to it and make money?
Basically, what he's trying to do is he doesn't have enough capital, so he's trying to leverage it using an option, right? What he's doing, and so he needs to realize if it goes down, he also maximizes his loss. I don't think he understands that. He will learn. He'll learn.
It's not gonna get IV crushed that hard because it's already in the money. What's the expiration date? The 11th or 4th?
Oh fuck! It's December.
Oh, is it elite?
No, it's this December. 3 months.
Then yeah, if he wants, he can do it. Wow, Tesla down 6%. He only loses 6 cents a day.
Wait, which call was he looking at? 32?
32.
How much is it? 400?
555 right now.
Do you think there's an easier way to look at all this information?
Yeah, they have a website.
That does what?
Flow algo?
Low algo?
Flow algo?
Oh.
Wait, what's Flow Algo?
Tracks a lot of stuff for options.
Oh, Rocket's going up. Nope. God damn it. Played myself.
Rocket's going up?
No.
Should I make the play? I haven't made the play yet.
I mean, it's good if PFE goes to 40, but I think 40 is too high for PFE. Let me see. Let's look at PFE's
No,
chart.
PFE's touched 40 before. I'm pretty sure.
You know, I'm just gonna cruise today as well. I think this week I'm just gonna cruise.
Yeah, see? 2018 43. But there's no catalyst to make it 40 unless they're doing something for Corona. The way. He says it won't. Go ahead, try it. I dare you.
The moment you think you're right is the moment you're wrong. This guy has made more than me though. So what am I to say?
Yeah.
He's smart. He's got a bigger brain than me.
Cross got the big brain play.
It won't. It won't. He said it won't. It's a COVID company. I thought they make condoms, or I thought they make dick enhancement. Viagra, right?
But the thing is, if he's buying it now, right,
it can only go up from here.
if it even drops to like 30, 34, 35, he loses a lot of premium because he's buying it.
Yeah, what would the premium go? Let's say it went to 32. His 553 would be what, like 100?
Hold on. Because I think for premium you use Delta. He wants 32, right? So he'd lose $85 for every dollar, I think. It goes down. If I'm reading it right.
Yeah. I don't understand. He made so much on his show. Why just keep doing that? I don't know why he would switch to trading an option on a blue chip stock. Pfizer is worth. Yeah, Pfizer is a $206 billion company. I mean, I guess he I guess he's realizing things like chill aren't gonna happen every day. I don't know. If I were him, I would just keep doing those small ones. Rocket, I'm gonna go get a burger and fries later. Alright guys, let's go back to stock because these guys are hilarious.
This guy's using an app called Flock.
Who?
Oh, it's just like Slack. Never mind.
He said 40. He thinks it's gonna go to 40 by December. Wait, so what do you think of my strategy though, Eric? It only makes sense if you have a lot of capital, huh?
Yeah, it only makes sense if you have
Like if I had 500,000 in my account, I would do this. I would fucking do this all day long.
Yeah, you would make a significant.
It would. I'm risking $500,000, but do you see like?
How much do you make if you risk 500,000? Let's just.
Well, I mean, do it from the one. The only issue with 500,000 is if there's enough volume. Because you realize when I'm doing them so out the money, the volume is very low. No one's trading those. Does that make sense? Because the price is so different from how much the stock is actually trading at. So that's actually my biggest issue is it's hard to fill these things because no one's buying them at these strike prices. No, but let's do it. So
okay. Oh, let me ask you this then. So like, you could. So
wait.
Could you technically have a really good call, and no one buys it from you?
No. What I'm doing is credit spreads, which means I don't need anyone to buy it. What I want it to do is to expire worthless. When I open it, I already made my $4 profit. For me to win, it needs to expire worthless. I don't need anyone to buy it.
Oh, I see.
So I actually want them to expire. Usually when you open options, you want to cut 50% profit, then you have to buy it somewhere. For me, since I'm buying weeklies, which means it's either a week or less, I actually want it to expire worthless, which means 0, right? 4 minus 0, $4 profit. Does that make sense?
Yeah, I see.
4,500 weekly. If I had 500,000 and I had the same ratio as that $9 to 1,000, I would make.
Yeah, I don't like those odds still.
You don't like those odds?
No, I don't like that.
I like it. Because I see that as 4,500 guaranteed, which is, if we do that, that's $18,000 a month guaranteed, like 99% guarantee. But it is true.
But is that from like what, 1 day of trading? Oh no, because your thing has to expire.
No. So I took the 4,500 times 4 weeks in a month. So it would be, if you had a 500,000 account and you were able to get these things that I'm doing, and there was enough volume and liquidity, you would be making $18,000 a month guaranteed money. The only way I'm fucked is earnings. See, I did not know Lulu. That's why when you're doing what I'm doing, you have to realize when earnings are.
Oh my god, I gotta take a shit.
I didn't even look at when Lulu was. You know, because Lulu's earnings is Wednesday. Next Wednesday. Or
next
Tuesday.
Wednesday.
I didn't know that. Does that make sense? So I'm only fucked. I'm only fucked if there's earnings or if there's a huge news catalyst. Like, let's say for Lulu, see, there wouldn't be a news catalyst for Lulu though, you know, unless they like bought out a company.
The CEO is arrested.
Yeah, and so look, because like look. I have 3 days left. Well, I mean, it looks like I'll be clear today. So there's 2 days left for me to be wrong, right?
I see.
Wait, what? Hey, are you looking?
Yeah, I'm looking.
Okay, look. So my thing was 450, right? So in 2 days, essentially in 2 days, Lulu has to move 13% up. So let's look at the last time it went up 13% in 2 days. Okay, there, right here. Boom. But that's Corona. Corona, if I did this during Corona, I'd be absolutely fucked. I'm fucked. I'd lose my 500,000. So that is the risk here. But the last time it moved 13% in 2 days was, last time was, can you see this?
Yeah, I'm looking.
8%. Yeah, so this is the last time it went 13% in 2 days. Right here. March. So if I kept doing what I've been doing after March 2, so for 6 months I would be winning. I only lose here, and then if we go back farther, the next time I would have lost is probably right here. Nope, see, 6%. You see that? Only 6% move. Do you see how stocks would never move 13%? So yeah, the next time I would have lost, I would have never ever lost. If I was doing this for 5 years, I would have only lost during Corona. That's it.
I see.
See? Do you see how I get my 99% probability?
Yeah, I see.
So yeah, these black swan events will fuck you. That's why if I ever see this shit happening again, like if cases, but as far as I know, I think we've reached stability. We've reached a plateau in terms of cases and deaths, I think. So I don't see this happening again. Do you see anything like this happening again? The Corona?
Well, they're saying that you can get reinfected with Corona now.
No, in terms of like that it'll affect the stock market. Because I don't.
No, I don't think it will. I think people now like.
I mean, it's the V-shaped recovery. It just shows this was all panic. March was panic. It was mob thought that Corona is going to be this huge thing that would destroy the economy, and people panicked. I think that's why the V-shaped recovery has been so strong, because people realized
that it wasn't going to tank.
It's bad. It's bad in terms of, yes, 150,000 people died, or somewhere about that, but economically, it'll hurt, what, 2-3 months max? And then, because I mean, look, and I know this firsthand, the most affected businesses are small businesses.
I feel like people are spending more money now, honestly, because they're at home.
No, but does that make sense that the highest affected were small businesses?
Yeah.
And airlines. But in terms of public companies are not small businesses. So they're not affected. Unless your industry, like if you're a tourism or airline, then you were affected. But other than that, like tech stocks, there is no reason why tech stocks should have even gone down. Now that we think about it, and that we were forced to stay home, I think that's why tech stocks have done so well. Like if you think about it, logistically, there's no reason why a tech stock would be affected by things shutting down, unless that tech company has to do their business in the building. And when Apple reported earnings a month ago, and it did spectacular, people realized, oh, no tech stock should be down right now, unless they're doing good. Wait, so do you really oh wow, Ulta's going up. Oh my god. Oh, but Apple's going back down. Oh my gosh, dude, Apple's going back down. Eric, why?
You're waiting.
Look at this. Why? Why? I mean, my Ulta went
Oh
off.
shit.
Hey, Eric.
Yeah.
Alright, so now I'm going to show you something very interesting. Let me see. But we need to go to Robinhood for this. So I might actually... Guys, I'm going to close the stream. I'm going to enter my private info real quick. Are you watching the stream still? I'm going to show you something
Yeah, I stopped.
of what this guy does that I've been contemplating. I think this is a good strategy. Before I have to go. See, to risk $85, would you do that?
For $1?
Every $1 move, you will make 85
that's
or
a
you
lot.
lose it. Okay, so explain to me how iron condors work. I need to see how much you.
From what I understand, it's like you do like 4 options. 2 of them are, it's like a short call, a long call, a short put, and a long put.
Hey. Hey, Eric.
Yeah, what's up?
So explain to me iron condors. Go.
I just explained it to you.
Say it again. Sorry, I wasn't listening.
I believe it's like you have like 4 options. It's like a long put, a short put, a long call, and a short call.
Yeah. So basically, you're buying 4 options, and so what do you want the stock to do? You bought these 4 strike prices. What do you want it to do? He's the Oracle of Korea. Okay, are you looking?
Yeah, I'm looking.
Alright, so give me a large cap stock. Or no, sorry, it has to be DocuSign. We have to do it on DocuSign. So the whole strategy on this is the chart up now? Let me know when it's up.
Okay, it's up.
So the whole thing here is you have to do this on something that's gonna have earnings. You need to do it on something that is gonna be primed for a move. And you'll see why. You'll see why. The reason why you want to do this on something that's primed to move is because it will give you a bigger spread. Bigger spread means more profit. Now, like if we were to do this on, Johnson & Johnson,
Yeah.
if you were to do what I'm about to do on Johnson & Johnson, you would be risking $500 to win $9. But on DocuSign, watch, I'll show you.
I mean, those premiums.
Oh, are you looking at these?
Yeah, I'm looking at them.
So look, you buy this one, right? And then to sell, you just sell the one that's more expensive. So again, if you buy something cheaper than what you are selling it for, you get a profit, right? That's why it says credit. Okay. Hello?
Oh, I see. Oh, I didn't
See?
I see that.
So that's how you know if that's how you know.
Oh.
That's it. So like I was always confused. How do I know if I want a credit? How do I know how to do a spread correctly? I just realized, just look at the premium. Now look, if I was gonna buy the more expensive one and then sell this one, I have to spend money, right? So anyways, so yeah, we're gonna buy the cheaper one and then sell the more expensive one, so we get a credit. Now for the puts, we're doing the same thing. You gotta get them way out the money. So buy this one.
I see.
And then buy this one. And then boom, see, our credit is 116. And then
But
look how much.
the only time you'd get fucked if someone actually like buys it.
No. You only get. Here, I'll explain to you what happens when you do this. So look, you're risking 1,000 to win $116, which is better than what I'm doing. But look at what our prices were. Look at what our strike was for Docu. You see the prices?
Yeah.
So basically, with this Iron Condor, Docu would need to go past 400 or go under 185. So we literally have, on both sides, we have at least $70 to be right or wrong. Okay? So if Docu is out of this 185, 400 range, let's say it's 405 next Friday, we just lost $1,000. As long as it stays in this range, you make $100. So sure, it's still risky, but I mean, let's look at the chart of Docu, and this is the range we would have. See, I can't even do the upper limit, but are you looking still?
Yeah, I'm looking.
Okay, boom. See that range? And then, but this is actually 400. This top line is at 300, right?
Right.
This is actually at 400. So we have this huge 400 to 185. Look, the last time it was 185 was literally... Oh wait, no, this is the 5 minute. Oh my god. Sorry.
Is it Docu?
Yeah. $185. Okay, look. The last time it was 185 was July. So actually, you know what? That's actually too low. Let's change this to 150. Actually, no, 185 was the lowest it would do though. Oh no, we can do 150. Let's do 150. That's too. But do you get the gist of what I'm doing?
Yeah, I see what you're doing.
So I think it can actually go to 150, which is pretty insane. So I'll sell this more expensive one, and then buy this one. See, but right here at these such extreme, faraway prices, the spread is so small, but we still make $73 on 1,000. So we're making $73, risking 1,000, but now our range is from 150 to 400. I can't even put 400 on this chart because it's so far up. So as long as it stays between here, by next Friday, we win $73. So that's what this guy does, and he turned 30,000 into 47,000 over 3 months.
What is he doing?
Doing this, he's doing way in the money. No, he's doing way out the money iron condors on stocks that have high volatility. So stocks that are about to have earnings.
Okay.
And he's made 52% on 30,000.
Damn, that Apple stock.
That's pretty good.
So, like here, would you do this trade? Sexy?
Huh?
Would you do this trade?
What?
So the iron condor is the range is from 150 to 400 on DocuSign. Huge range. So you would win $73. If you're wrong, you'd lose 1,000.
No.
No. See, I like these. I like these very risky ones in terms of if you're wrong, but it's like, are you going to be wrong? You know. See, because it would literally need to. You see these two huge candles, Eric?
Yeah, I see them.
For you to lose, you would literally need these candles for the next 6 days. It's like, can the stock move that much in 6 days? Like, can it keep moving this much? I don't think it can. It's gonna consolidate.
With earnings, it can.
With earnings, it can. That's that. Well, no. Actually, what he does though is he closes it before earnings, so he doesn't even wait until expiration. Because I took a. Can we look at the one I put in Telegram? What did I put in Telegram? I put one in Telegram just to test it.
여보세요.
안녕.
Onion.
Guys, are we buying PFE?
I'm not, dude.
Why not?
I have no more buying power. You know my buying power? 41 cents.
Mine is at $18.
I have 41 cents of buying power.
Dude, it's a COVID vaccine.
Oh, dude, I gotta go.
Okay. Alright, good night, everyone.
Wow.
Damn, son, where'd you find this?
Yeah, you came in late.
You guys are gay.